Could 2024 be the year where home prices across the state of Washington crash and collapse, particularly in metros like Seattle, Spokane, as well as Tacoma? Well, I'm going to answer that question for you in this video if you're a home buyer or real estate investor in Washington by looking at the data. And the most obvious thing to note about Washington's housing market is how expensive it is. You can see the typical value of a home in Washington is $562,000, which is the fourth most expensive price in America after California, DC, and Massachusetts. So I know many of you home buyers out there across the state of Washington are frustrated by these extremely high prices. For instance, if you wanted to buy this 3-bed, 2-bath house on the north side of Seattle, you would have to pay $1.5 million, everyone, or $9,300 a month for your mortgage payment. And while we can see that this looks like a nice house, that's just simply way too much money. And ultimately, those sky-high prices are what scares me about Seattle's housing market, for instance, in 2024, is that when you look at the data, you realize the local home buyers in Seattle are priced out and that many of them can't even qualify for the mortgage. With the monthly house payment as a percentage of income in Seattle registering 46% heading into 2024, meaning that the average buyer in Seattle is spending 46% of their median income. And this suggests it's a bubble, right? Because if you see the long-term average here is 31% of income needed to buy a house in Seattle. Now you need 46% of your income, which suggests that we're going to see a correction and that both prices and mortgage rates will need to go down in the future to bring demand back into the market. Because demand across Washington's housing market and Seattle's housing market is at rock bottom levels right now, folks. The amount of buyers is really, really low compared to the historical norms. And when we see these kind of low amounts of buyers, low amounts of home sales, that typically means that prices will need to go down in the future. Because according to data from Redfin, through January, home sales in Seattle were down 3% from a year ago, and they were down over 50% from where they were in late 2020. So folks, the buyers are out on the Seattle housing market, suggesting that prices will need to drop to bring these home sale and buyer demand figures back to normal. However, there is a problem, everyone, and that's the fact that Washington's housing market and Seattle's housing market tends to have very low inventory levels. And not just low inventory levels like right now, but low inventory levels in general. Like very seldom does like a good house get listed at a reasonable price in a metro like Seattle. So even when buyer demand is really low in absolute terms, it can still feel like the market's very competitive due to a lack of inventory. As for instance, here on Reventure app, which is the tool I'm using in this program that you guys actually have access to at www.reventure.app, you can see that in Seattle, Tacoma, Bellevue, Washington Metro, there's 4,200 homes on the market, which is only 0.4% of the 978,000 houses. So 0.4%, that's a very low level of inventory on the market. Now, we can see that this inventory has gone up in Seattle significantly from the pandemic. So it's way up from the pandemic lows and is now at about the long-term average. But I suspect we'll need to see this inventory climb more into the future for us to see the big price declines that are needed in Seattle to make houses more affordable. And in fact, folks, prices have already been going down in Seattle's housing market. Prices are down about 7% from their mid-2022 peak in Seattle, with values going down from about $744,000 to $696,000. So there has been an improvement in affordability, particularly in King County, the main county in Seattle, where values are down by 8.2%. We can see if we zoom out that prices are down in most parts of Washington, but especially in King County as well as Jefferson County out west, where prices are down 10%. These are the biggest declines here in blue. And we can see throughout the rest of Washington as we head east, prices are down anywhere from like 1% to 5% in Spokane. But those price declines don't really feel like a major improvement to Washington home buyers, because in the span of those prices going down anywhere from 2 to 10%, we've seen the mortgage rates go way up. So the 30-year fixed mortgage rate is now around 7%. So that's actually meant that your monthly payment hasn't really improved as a Washington home buyer in that span. So I think the central question on a lot of your minds out there, if you're a home buyer in Washington or any other state, is what's going to happen to home prices in the future? Like, will you actually see more improvement in affordability if you wait it out? I know a lot of you are looking potentially buying a house in the spring or the summer, and you're deciding like, should I buy and take the plunge today or should I wait? And one thing that you could help inform yourself in making that decision is understanding if prices are more likely to go up or go down over the next 12 months. And to do that, I would like actually to direct you guys to Reventure app, which is the program that I'm using in this video. And I actually just launched a new tool on Reventure app called the Home Price Forecast Score. And what this tool does is it takes the momentum of home values based on fundamental data points like appreciation, inventory, price cuts, and days on the market, and makes a prediction about whether prices are going to go up or down the next 12 months. And so let's just take a look here at a market like Spokane. You can see in Spokane, the home price forecast score on Reventure app is a 43, meaning slightly below average, meaning that prices are likely to either stay stable or go down over the next 12 months. And the way we're figuring that out is we're looking at the trends in recent appreciation, days on the market, mortgage rates, inventory, and price cuts in Spokane. And what you can see is that during the pandemic, like Spokane became a huge buyer's market. It had a home price forecast score of 70, which would have actually tipped you off back in late 2020 that prices were going to surge. But now that score has gone down to 43, suggesting that prices will continue to incrementally go down. Maybe they're not going to crash over the next 6 to 12 months, but they should continue to drop based on the current trends in inventory, price cuts, days on the market, and appreciation. Now, this score is not a guarantee of where prices are heading, but it gives you a pretty informed analysis of what's going on in your local housing market. And what's fun about this is you can actually break down the data and look in different neighborhoods and zip codes. Like say you're a home buyer and investor looking in different neighborhoods in Washington and wanting to understand like what's going to happen with home prices. Well, we can look at that data. For instance, here on Reventure app, if you type in Tacoma, you can see actually there's lots of variation in home price forecast and momentum depending on the zip code you're in. So if we were to go to downtown Tacoma here, you can actually see it has a score of 36, meaning that prices are likely to trend down into the future, with the big thing being inventory. There's now lots of inventory on the market in this zip code, way more than normal, which is likely going to put downward pressure on prices. Now, conversely, if we were to go out east, we can see in some of these more rural areas to the southeast, we actually have home price scores above 50, which is more indicative of a stable market or one where prices could be more likely to increase in the future. And we can actually see here in this zip code in Pierce County, the home price score went to 33 last year, which was indicating declining prices, now bounced back to 53, which indicates stable prices. And you can see actually this score bottomed out in March 2023 at 26, indicating heavy downward price pressure, and has now bounced back to 53. So what's great about this score as well, in real time, you can actually track the market. And to access that score for every zip code in Washington and every zip code in America, go to www.reventure.app. But hold off, folks. Don't go there just yet. I have some more information, some more data that I want to show you on the Washington housing market that you really need to understand as a home buyer and investor, particularly the migration trends. Washington is actually a state that surprised me in how many people move there. Like almost every year, Washington is adding people, and its population growth figures as a result are pretty impressive. For instance, if we head back on over to Reventure app, look at the state view, and then look at population growth, we can see the state of Washington grew its population by 5.1% over the last 5 years, and that's lagged by 1 year. So it's from 2017 to 2022, 5.1% population growth. That's actually a population growth rate that's higher than Tennessee, North Carolina, Georgia, and Alabama. So like everyone talks about these states in the Southeast as being high growth, which they are, but Washington goes toe for toe with them in terms of its population growth. And you can see, there was a bit of a dip in Washington's population in 2020 due to the pandemic, but it has since bounced back. And even actually, what I was surprised about, even in King County, we can see King County, which covers Seattle, that's even still adding population. So this is actually something that really surprised me and impressed me when I dug into the data for this video, was how many people the state of Washington is adding. Clearly, some of this is people moving in from California. Some of this is due to the fact that Washington has no state income tax. And so this is something that could provide support for the Washington housing market into the future. However, if the home prices don't go down, then I think there's going to be a problem, because if the home prices don't go down at their current levels, naturally fewer people are going to move in, right? If a 3-bed, 2-bath house is 2,000 square feet costs 1.5 million in Seattle, I mean, who can afford that? Not very many people can afford that outside of select people leaving the Bay Area in San Francisco. And so I think Washington and Seattle's continued long-term growth is really going to be dependent on the prices going down to a level where affordability is regained and people can feel like they can afford the houses again. And actually, this was something that happened in Washington in the last housing downturn from 2007 to 2012. Washington actually experienced a pretty big housing crash in that last downturn. You can see that prices in Washington went down 29% in that downturn. They went from 307,000 to 218,000, much cheaper than they are today. That was one of the biggest housing downturns in America at the time. You can see that not every state had a housing crash in the last downturn. Like Oklahoma, prices didn't go down. West Virginia, prices didn't go down. Kentucky, they only went down 5%. But in Washington, they went down 28%, with the biggest drop coming in Seattle, where the prices dropped 33% in that last downturn. You can see that drop in prices here on this historical home value graph for Seattle. Now we're all the way back up to even higher record price. And, folks, if you just look at this graph, you say to yourself, yeah, this current trend in prices probably isn't that sustainable. According actually to Reventure app, I have home prices in Seattle pegged at about 17% overvalued compared to their long-term norms. 17% overvalued compared to the long-term norms. Actually, in 2019, before the pandemic, prices in Seattle were slightly undervalued. Now they're about 17% overvalued. So I wouldn't be surprised if we see a correction in Seattle over the next couple of years as a result. Some combination of declining home prices mixed with rising incomes is needed to bring this housing market back into balance. Additionally, I would like to focus you guys on the fact that at the end of the last crash in Seattle, prices were really undervalued, like 25% undervalued. So if you're a buyer, it's all things the same, it's probably better to buy into a market when it's fairly or undervalued than when it's overvalued. And this overvaluation also varies significantly by neighborhood and zip code. Not all areas are created equal. Real estate is hyper-local. So if you're a buyer, yes, it's useful to know, across your metro and your state, how prices are trending. Are they overvalued, undervalued? But you also got to know, like, once again, in your zip code, in your neighborhood, are prices fairly valued? And if we zoom in here, we actually see huge differences. Zooming in, actually, we can see prices are significantly undervalued in downtown Seattle. Now, this is something that I know is going to be a little controversial here, but let me show you what I'm talking about. If we just look at some of these downtown Seattle zip codes, you can see values 47% undervalued. What's going on there? Well, in 9810, we can see that home prices have declined over the last 5 years. So values have dropped over the last 5 years, while at the same time, the median household income of those living in downtown has skyrocketed to 115,000, which means that the home value to income ratio has plummeted all the way from like 14x back in '07 down to 5x today, meaning that these areas towards the urban core are actually cheaply valued compared to what they used to be. Now, I know what everyone's going to say. You're going to say there's a reason for that. It's because downtown Seattle has become not as nice a place to live over the last 5 years. There's been an increase in crime, and there's been also an exodus due to remote work, and all those things are true. All those things are true. I'm not saying you should rush to buy in urban Seattle. However, I am saying that the data says that that housing market is actually cheap compared to what it used to be in terms of home prices to income. However, now if we zoom out and head north a little bit, we can see there's other zip codes like Kirkland here. We can see values are 32% overvalued in Kirkland. They're 47% overvalued in College Lake. And so these would be areas where I have much more concern about there being a crash, right? Because we can see this is a zip code where the prices were pretty fairly valued up until 2019 and then have exploded. You can see the typical value of a house went from 860,000 to 1.3 million, while the median household income grew, but not by nearly as much as the prices. And so really, if you're a home buyer and investor trying to make a better decision in Washington, Seattle, or any other part of America, here's what I would suggest you do. I would suggest you do two things. Number one, understand the overvaluation levels in your zip code and in your metro. How overvalued are prices or undervalued compared to long-term norms? The more overvalued they are, the greater the risk of future price declines. Now, that's not a guarantee. It's not a guarantee that prices are going to crash if they're very overvalued, but it makes it more likely. So you're going to want to understand those overvaluation levels, number one. Then number two, you're going to want to understand what the current direction of the market is. Like right now, what's going on in the market? Are prices likely to go up or down the next 12 months? And you can answer both those questions on Reventure app. Go to www.reventure.app, sign up for a premium membership. The cost is $39 a month, and you'll gain access to all this data. And if you open up any of these zip codes, you'll be able to see the overvaluation rate compared to its long-term norms, as well as the short-term home price forecast score, which is looking at the trends and days on the market, inventory and price cuts, as well as appreciation to tell you where prices are likely heading in the next 12 months. Understanding those data points is going to provide a lot of clarity to you as a buyer and investor if now is the right time for you to buy, or if you should wait, or if you should potentially look in another area where prices are maybe not as overvalued or are more likely to hold over the next year. So to access all of that data, go to www.reventure.app and then just simply type in your city. And you can start by looking at home value and home value growth data for free, and then gravitate to signing up for a premium account. The cost is $39 a month for a monthly pass. You can cancel at any time, or you could do $399 for the year and get a 15% discount. This is going to give you access to overvaluation rate. It's going to give you access to a whole bunch of other premium data points, as well as the home price forecast score viewable for every zip code in America. Until next time, this is Nick from Reventure Consulting signing off.